At the moment, no, Larry, that manufacturing story abroad is starting to come into the United States. You see it in the ISMs. I'm not saying we're in contraction territory here in the United States, but you're starting to see them roll over. Are you not worried about that? That the weakness that's been triggered abroad from this trade story is starting to bleed into the U.S. economy? There's real signs of it, Larry.
I don't deny that. I mean, the United States is not immune from the world economy. Maybe we can talk some about problems and policy mistakes in overseas. I am, however, heartened. By the way, new orders in that ISM were up nicely, so that's a good sign. Manufacturing itself in the industrial production report, as you may know, is up nicely in May and June, and durable goods, particularly so-called core CapEx durable goods, had a big increase in June after a decent increase in May. So we're looking for a comeback there. I mean, a lot of these issues, and I don't deny the hard goods sector has been slower. It's the consumer sector that's really dominating. But, you know, we have unfortunately faced 2 years of severe monetary restraint. Now, hopefully that period of monetary restraint is coming to an end. And I note that the money and bond markets are predicting several more rate cuts from our central bank. So that's going to help the story. But we still have strong incentives in place to produce and work and invest. And I think our economy is going to have a very strong second half.
But, Larry, let's be clear here. The reason that Fed Fund futures start to really price in a rate cut in September was after that tweet. It's the belief that this trade story is going to do some real damage to the U.S. economy. And that's what I'm struggling to get my head around. Going into 2020, we're going into campaign season now. I'd love to know what the message is from the party to the U.S. consumer and anyone working in manufacturing that we're going to push this. We're going to tax the HAL, so to say, out of China until they break and give us a deal. How far are you willing to go with this?
Well, Jonathan, I just want to note in today's jobs report, not only 164,000, which is a solid number, households, which is the small business number, household employment was up 283,000. Here's one very important number. Civilian labor force up 370,000. Last month it was up 335,000. People are coming out of the woodwork to come back to work because of better job opportunities, better job training opportunities, and higher wages. That's so important. And we just got, and this is so important to the story of the strength of the U.S., the wage and salary numbers revised up across the board. The last 12 months, wages and salaries rising at 5.1% with, no, I beg your pardon, 5.5% with an above 8% saving rate, which is absolutely phenomenal. And the biggest gainers in all of this are the low end, the middle and low end people, the blue collar workers and so forth. In fact, the bottom 10% is the biggest gainer. Some of our critics on the other side might want to check those facts to improve their own analysis. So I think we're in very, very good shape here at home.
Larry, looking at the equity market, it's not in good shape over the last couple of days. Granted, it's been a fantastic year for U.S. equities, but there's some real weaknesses that has emerged in the last 24 hours. The president said to reporters yesterday he wasn't concerned at all about the negative reaction from markets. I expected that a little bit because people don't understand quite yet what's happened. Is this a change of stance from the White House? There used to be a real concern about equity markets. Have we pivoted?
Well, no, Jonathan, I'll go back to what you said 2 sentences ago. We've had a heck of a year. The indexes are up more or less 20%. And I think that is, by the way, foreshadowing a very strong economic growth period for the rest of 2019 and on into 2020. It's been a fabulous stock market. And by the by, encouragingly to me at least, in terms of the key sectors in the stock market, the hard goods sectors, the industrial sector, transports have had a terrific comeback. I noticed chips and semiconductors too. That tells me that any pause in the economy in hard goods last year, undoubtedly related to the monetary tightening from the Fed, that pause may be coming to an end. And that's why I'm pretty darn optimistic when I look at today's job numbers and I see all these literally hundreds of thousands of people returning to the labor force. I say something very good is cooking out there.